Bitcoin has crashed again. We've seen a rejection from the bull market EMAs, which were lost as a support only 2 weeks ago. Something we were talking about recently, last week, August 21st, something about a U-shaped reversal back into the resistance that could be these bull market EMAs, and we've seen a rejection after a failed reclaim. That's what we had to see after the Grayscale news, and we haven't been able to build on that momentum. In fact, we haven't even been able to revisit the lower high resistance. What's next after this crash? That's what we're going to be talking about in today's video. Let's dive right in. Subscribe to the channel for more videos like this in the future. Like the video for more videos like this going forward, and let's get into it. So Bitcoin right now is teetering on a very slippery slope. We're seeing the 27,200 level be the key monthly level that Bitcoin really needs to hold as a support going into the monthly close. We're seeing that Bitcoin is slipping below this level quite considerably, and this is the level that held only a few months ago. Now we're losing this level as the monthly candle close looms large. So a monthly close above this level would still maintain this support intact, but a monthly close below here, and we're already going to be seeing problems because downside wicking only a few months ago occurred, but now we're actually slipping below here, not being able to maintain prices a little bit higher. So a monthly close here would start to confirm the breakdown from 27,200. So if September begins at around 26,400, and then we see a relief rally back into 27,200, maybe an upside wick beyond there, but ultimately a rejection going into September, then that's going to be ultimate confirmation that 27,200 has turned into a new resistance. At the moment, it's being lost as a support. Could it flip into a resistance going forward into September? Could we actually see this bearish fractal that I spoke about in yesterday's video? Could we see this bearish fractal take place? Yesterday, I shared this chart in yesterday's video. 27,400 was where the price point was, and we're already $1,000 below that. It looks like for the time being that this bearish fractal could come into play. More on that in yesterday's video. But still, 26k is the key support here, and we're seeing long upside wicking into higher price regions. The Grayscale hype was strong, but it wasn't sustainable. Loads of people FOMO'd into this wick, much like we've seen FOMO here, but just look at this. FOMO wicking at 31k, whereas we're now seeing FOMO wicking at much lower prices from 20k, 28k to 26k. So that just gives you a psychological perspective and picture here that FOMO was strong a few weeks ago at 31k, and now FOMO is strong at much lower prices, 28 to 26k, which just shows us that the sellers are quite strong. They are stronger, weighing down on price as we're going down along and pressing and weighing down on this 26k region. FOMOers cannot sustain an uptrend, and the sellers are just too strong at this point, which brings into question once again this 26k region, and we might have to start talking about the double top formation here once again, because this recent flick up, it looked like could it potentially distort the double top, but at the moment not really. It hasn't really distorted the double top, so a measured move is to measure the top of the double top of this M-shaped formation against the bottom of this 26k support, and that brings us with a measured move target into 22k. And we have to talk about how unforgiving August has really been. We've seen 12% downside from this candle, which was the beginning of August, all the way to current prices, but generally 16% drawdown in August, generally speaking. So if we just compare that August to what we've seen in the past, 17%, 16%, those are some of the worst drawdowns in the history of Bitcoin's price action in 2014 and 2015. 17% and 18%, whereas here in this month we've seen a total 16% drawdown, which means that this is one of the worst Augusts in the 10-year history of Bitcoin's price action. So that really does say a lot about how complicated this month of August really was, especially with the Grayscale hype and it winning against the SEC. So now looking into September, because we're now going to see a monthly close looming large, it's just around the corner. September isn't any more forgiving. perhaps a little bit less steep on the side of retracement. We've seen only 2 double-digit retracements in Bitcoin's price history in September. Usually it's a very mild positive single-digit gain or a single-digit retracement. So quite typically we tend to see 7%, 7%, and 7% here as well. A 6% gain, but generally speaking, minus 5% retracement, so -3, single digits around the 7% region, which is one of the frequently reoccurring retracement depths for September. So if we were to just propagate from current price levels going into September, because we're one day removed, 7% towards the downside, that brings us to 24K, 24,400, which is incredible because a frequently recurring September drawdown gets us right bang on into this neckline of this inverse head and shoulders, which is pretty phenomenal. This left shoulder, head, and right shoulder right over here, which was never really retested. Downside wicking here was quite strong, but never really picture perfect retesting this level. We'd have to see a breakdown from 26K to validate this double top, and then we're well on our way to satisfying that 7% drawdown into the neckline for a retest. But what if we get a 13% drawdown like we've seen in September, right? We've seen a 13% drawdown on the higher end of average in terms of how bad a retracement can be in a September. That would get us into 23K, and that would constitute a very volatile retest of the neckline. In fact, the fractal that I spoke about yesterday assumes that we lose 26K, flip 26K into resistance, drop into the neckline, and maybe recover back into 26K and flip that into resistance once again before going towards the downside, potentially failing this neckline retest. That's what the fractal assumes. So if we do fail this retest, then 13% really does get opened up here. But on the worst potential situation of 19% going down to 21K, a 19% drawdown in a September is what we've seen in 2014. 2014 being a bear market year. So this isn't a bear market year. This isn't 2022. So I don't expect such steep drawdown. So I wouldn't be worried about that sort of drawdown going to 22K. But having said that, the measured move here the measured move of the double top assumes that a drawdown to 22K could occur. So that's quite interesting, where at 19% drawdown occurred in a bear market year, and we need to have almost 19%, around 14, 13, around 15% drawdown to get that measured move of the double top. That's quite interesting to see. Could we see such a drawdown going into September? Would it be really that bad, just like August? Because this has been the worst August in the history of Bitcoin. Would we see one of the worst Septembers in the history of Bitcoin? We'd have to have really terrible luck. But this double top would need to first validate with a loss of 26K support for that measure move to be finally in play, with the first targets being the inverse head and shoulders neckline. If that fails, especially if we recover and flip 26K into a new resistance, then we probably have to see lower levels. So far it is a complicated month. It has been a complicated year where we've seen rejection at the 31K highs. We're now retracing for multiple weeks at a time, facing potential drawdown. But what does the price cycle top indicator say about all of this price action? It would be really interesting to learn more about that, and you can in this video in the top right hand corner, and I'll speak to you in that one. Speak to you soon.